Yo, what's up, everyone? It's your boy Looney, and earlier this week we had a major shift in the geopolitical landscape. The U.S. launched precision airstrikes on Iran's nuclear sites using massive bombs and cruise missiles, and this has affected the market right now, and it will affect the market going forward. I'm going to break down what it means for the markets and my own strategy. But before we get into it, quick shout out to the Discord community. It is free to join. And then I also have a premium membership, which gives you perks like one-on-one coaching. I do trade callouts, giveaways, and I have a selling options course. And it's all $8 a month. You could check it out. All links to it are in the description. So yes, we had stealth bombers that dropped massive bombs on Iran's underground facilities. So these strikes mark a significant escalation and the first live use of these bombs. So unsurprisingly, the markets negatively reacted, going red, and we really only saw crypto getting affected because it was open during these after hours during the weekend. But right now we're seeing the market open and my portfolio is red and a lot of these positions are bleeding. But I am able to take advantage of this sort of situation. And the way I am doing that is dollar cost averaging. So I am buying all these dips. I'm buying every day. And it's very hard to do that if you don't have it automatically. It's hard to buy it on red days. But because I have it automatically, I am forced to buy it. So it buys for me at around 5 to 7 p.m., I believe. And it's $3 a day in Bitcoin. So I'm able to dollar cost average and just build a long-term position. And I do that with other cryptos as well. But also I'm able to hedge. So I have a bunch of covered calls that I did have to roll because we were running up a lot. And because I rolled, now they're in a situation where they don't need as much management because they're out of the money and I don't really need to roll, or at least for now I don't. But these credit spreads that I opened, these I don't usually roll. So because of this crash, this is actually able to get this credit spreads to be profitable and I could close them out for a profit. We'll see how they end up as we get closer to expiration because they do take a little bit to actually work out what the actual profit is. So yeah, I was prepared for some kind of volatility and I did that by doing credit spreads and covered calls, but I also do have some selling puts and these are the ones that are going to be hurt. But again, I was prepared to buy these shares at the prices and this $14 put, this $13 put, 13 and a half, 14 again. I'm all prepared to buy it at the strike prices. I'm okay with owning Mara at 13 or 14 because I do own it at 16 right now. So bringing my cost average down is perfect for this strategy for long-term success. And because I have cash on the side, which is another strategy I did, is just simply keeping cash on the side, waiting for better opportunities like we might see now, I can dollar cost average even lower. So if Mara goes to, well, it's already down, it's under 14. So now I could go lower strike prices. I could do $12, $12 and a half, $11, and I'm able to dollar cost average by selling options. So having cash on the side is very important if you want to be prepared for any kind of market. And that's what I'm trying to do. Be prepared for these kind of moments. Now, I am aware that altcoins have been taking a hit very hard and my portfolio is taking a hit. So it's not like it is green, but because of this volatility, I could take advantage of this sort of dip. And we might see this dip carry on for weeks or months or maybe not a year, but we'll see. It could go on for a pretty long time or it could be short-lived. And I'm going to be very strategic with choosing what my strategy is, whether it is selling more puts or maybe even buying calls. We'll see. If we see massive volatility, I might end up buying calls, which are a lot more aggressive with bullishness, whereas selling puts is a bullish strategy. It's just not as bullish as just buying a call. And if we do see massive volatility, I will think to do that. And that's why this strategy works and it's consistent. And when there's conflict that increases uncertainty, this is a perfect environment to leverage elevated premiums. So I could sell covered calls to let me get paid up front. And then the sell puts, again, I could collect premium. And it's not a gamble. It's not going to be always correct, but it's a lot more strategic, and I could get prices that I want to own at. And we'll see where things go at. So if we look at like SoFi, this one is down 4% pre-market or overnight. And now my $15 calls are going to be a lot more green. They're going to be probably positive tomorrow. We'll see exactly what they'll be. But overall, this $15 call is looking like in a better position. And I'm curious to see if I will open red or green on market open, because I do have a lot of covered calls, but I do have a few puts, and I'd like to see where my overall position holds at. But yeah, I wanted to do a video on this and just reacting to this geopolitical issues. You don't have to sell it all or panic sell. You could just simply do little bits. You do a little bit at a time, maybe just dollar cost average, maybe dollar cost average by selling options, or just sitting on cash, wait for even better opportunities. And I'm kind of doing all three, but this is what the strategy I am going to be successful with. And if you want real-time trades or just help setting up your own volatility-based strategy, you can join the free Discord. Link is in the description. And then if you want full alerts or monthly coaching and a option or selling options course, I have a premium tier at $8 a month. Anyways, stay sharp, stay ready, and peace.